So I thought what we do today is just have a pretty, just a simple strategy application session where we cover. But when we look at every market, we'll cover kind of three things. Obviously, we're going to cover strategy. So we'll look for buying and selling opportunities in these markets, entries, stops, and targets based on our supply-demand rule-based strategy. And when we go to a different market, we'll start out with the bigger picture opportunity, and then we'll zoom in and look for a smaller time frame opportunity as well. That way, we'll focus on that income and wealth. And let's begin. Why don't we begin with the dollar, if that's okay? And I can go to any market you want to go to. I'll cover all the big ones. I think we'll have time. So we're looking at a 60-minute chart of the dollar, and we can see price has rallied up to a fresh supply zone. Well, it's not fresh as of the last few hours, but very nice level. All right, strong odds enhancers with this one, and we'll score out very high with our odds enhancers. With another level sitting just above it, rally-based drop. Price is sitting up here with not a whole bunch of demand below, so on a smaller time frame, you'll see some demand, but the dollar could fall from this area. When we back out and look at the larger time frame, you can kind of see where we've, we turned and really at the beginning of this demand, and now we're back up to this supply. So watch that. This is a key level for many markets, and even if it goes a little bit higher, which you'd probably expect at this point, ultimately you'd expect the dollar to turn down a little bit. Right? I want to take you over to the S&P next, and then we'll go to some currency markets after that. And I'll cover, I'll make this kind of basic review of strategy, and we'll also cover quite a bit of detail. All right, one more chart. There it is. So it's a great day to look at the S&P. I know it's a holiday here in the United States, but if we start with the larger time frame, right? Maybe this daily chart, you can see we've had a lot of sideways kind of whippy trading action, wide whippy trading action with very little demand below, as seen on the daily. That's one clue that we need to watch for lower prices, at least in the near term. When we take a kind of an X-ray snapshot of that on a 4-hour chart, the 4-hour chart certainly supports what we see on the larger time frames. Right? It's almost like you have, and as you go smaller and smaller in these time frames, you see we have multiple levels sitting on top of each other. You can see down here in the 60. What we're kind of rallying into, just a little bit higher. Not there yet. So remember, there's always two things. It's where our price is going to turn and where our price is going to go. Okay. Where our price is going to turn and where it's going to go. So on the turning point side, we have some levels up here. And again, you can look inside these on the 60, but you can see it down here in the lower left corner. Okay, we have some demand, some supply starting right up here, 21.25, and then a whole bunch just a little bit higher. So it's like a 10-point range up here. Oh, almost forgot. Just full disclosure. So I'm already in a short position from last week. So just so everyone knows that. Not as big of a position as I would like. I wanted the market to go to a little bit higher into the 2130s. It didn't, so I was only able to get on a portion of the position. But anyway, so I'm short from last week in the S&P still, and plan on letting it just play out. So we've got the where price is going to turn part kind of down. We've got the general area now. Where our price is going to go. For that, we look for the opposing demand zone. Okay. So if we look down and to our left, right, you may look at this and say, well, that's good demand. Well, it was fine, but we've already been back here and we spent a lot of time there, right? A full day, a little more than a day was spent down in this area, which means buy and sell orders were being matched and order flow was being filled, right? So there can't. So our assumption then is, and then we came back here again and bounced, and now we're going up to supply. So the assumption then is there's not a lot of buy orders left here. Therefore, we look to the next demand level below, and when we go down in the chart, we don't really have anything that even remotely resembles demand until we get below 2100. Okay, and that's not that far away. We're in the 2120, so that's really not that far at all. But and if you look below that, right, all this area, this price section right here, none of this is fresh demand. So down to 2060 on the time frame we're looking at now, there's nothing even close that there's nothing that even remotely resembles fresh demand. So we have some conclusion. We have some fresh supply levels above, no fresh larger time frame demand levels below. That suggests lower prices in the near term. It's not to say we can't turn higher, at some point, but that'll happen at demand, and that's not where prices are at right now. Okay, so we covered the dollar, we've covered the S&P. So that's the bigger picture view. Let's go to the smaller time frames now. Every market we'll look at, we'll also spend time on the smaller time frames. You can see the S&P is at an easy time rallying up to this because there was nothing to stop it. No supply in here. All you're going to get are a rally. But now we're up into supply, so I'd expect prices to kind of stall out up in this area all the way up to, the 21 and a quarter. So you're probably have a little trouble here. Well, let's see what's sitting just above that. Yeah, we'll go to the see some. So like I said, we'll start to hit that larger time frame supply in the 21-25 area. It's a big area. So that's why I was scaling into a short position. Wasn't that easy to pinpoint an exact turning point within a 2-point range like we so often do. So, but that's okay. That'll happen sometimes, and it's well worth it with the profit zone below. Okay. But I also want to do this. I'm going to go to maybe just go to a little bit bigger time frame, just so you can get an idea of what's below us. Okay, so we have this area right here. Again, this is I caution you. This is overnight trading on a holiday. Okay, so these are not trades. I'm going to stick with the trade I'm in, but these are not trades that I would necessarily initiate. I'd want to see prices go a little bit higher into that, maybe that 25 area. I don't think where I'm drawing these lines right now, I don't think there's a big institution sitting there. But let's look down now and to the left. Any fresh demand down here? No. Right? Now we go below 2116. Okay. There's 2116 again. So remember, we've already been there over to the right. So let's go below 2113. 2113. Now when we look down, here's more price action. Right here. 2112. So this area right here is something we would look at. And again, this would just be for a short-term bounce. A trade you're in and out of in just minutes, maybe less. Okay, remember we said we were going to cover big time frames, small time frames, opportunities. So that comes in around 2112 and a quarter down to 2111. And here you need to stop, I would say, as a rule, just half a point below that level should be fine. And you're trading that for a short-term bounce, right? A little short-term trade. Ultimately, if you're in that bigger picture short and it's and price is falling into a level like this, Possibly it's a profit taking area, and if you do, you'd want to do it before that, like a 2113 type exit, or you just leave it alone. Because again, in the big picture, shouldn't be price shouldn't have a hard time getting below 2100. So I'm in that short position. This 2112 is not going to scare me. Okay. So we'll leave that one alone. And why don't we go over to let's go over to the euro. Just you wanted that. Oh, there's a request for NASDAQ. Yeah, how about if there's time at the end, we'll look at the NASDAQ, because it's pretty much the same market as the S&P. Daniel, no. In fact, I love trading the European Open, especially in the DAX and the FDSX and the Bund. Yeah, I love trading those markets with strategy. I find they're all going to work the same, but you just have less competition there. Okay. But yeah, if sticking with the U.S. session is working well for you, then just stay there. There might be other things going on during the European session that you're looking at too, or I'm not sure. Okay, let's look at the euro. So remember, we looked at the dollar, so that's going to obviously come into play in a big way with all these markets, especially the euro. Let's go to, let's start with the larger time frame. Chat box over here. Okay, not a whole lot to look at on the weekly, but we did hit this level right here. Remember, we had this in last time. Yeah, it did. It hit this. This big supply zone up here. And fell, obviously, and if the euro should happen to get up into this range, yeah, there's a huge profit zone there, but I don't see that happening anytime soon. What you want to look at is how deep do prices go into this level on that first retracement, and it was probably went in a little bit less than halfway, but it did turn up in the meat of the area, okay, and fell pretty hard. Now, what's sitting below? Okay, remember when we look to the left, we're going to have to go down to a daily chart, because on the weekly chart, is there anything to stop the euro from falling? Now, when we look on the weekly chart, let me do it this way. All right, I'm sure most of you have looked at this already, so I'll be quick. So we put a line in there. We just want to scroll left and see what we're looking at. You're going to see a little bit of demand on the daily in this area, so let's take a look. And that's why prices turn there. But we've already been back there once. So now I just want to change this chart to a daily so I can keep those lines. So let's do that. All right. So this is where prices turn. Now, when we look just below, we do have a couple of levels sitting just below. Okay, let's put those in. But again, we're covering every market we're going to look at today. We'll cover the larger time frame first, and then we'll move down and set up some short-term trading opportunities. Okay, this one comes in about right there, about 102.50. Okay, so we're obviously well below that. The origin of the gap, no. So I'm glad you asked. Someone's asked about the origin of the gap. Typically, a lot of people, the retail trader focuses on gaps. They read trading books and look at internet trading information, and that you buy the gap fill or sell the gap fill. But what you see over time is that strategy doesn't work for people. So what we do in Online Trading Academy is we want to focus on where the fresh supply and demand levels are. And one of the really nice setups is around gaps. So when you see a gap up like you have here, what you want to do is find the nearest fresh demand area of demand below that gap. Okay. And we see opportunities like this all the time in other markets. What will typically happen, you'll see a lot of retail traders come in and buy right at that gap price, whatever that gap price is right there. Look at that, it happens to be 103 even, right? So you'll see a lot of retail buyers come in, buying there, and then where do they put their stop? Well, they do exactly what the trading book says, or the seminar they just took, and they put their sell stop just below it, right here. Well, price comes down, they buy at the gap fill like the book tells them to do, or conventional technical analysis tells them to do, then they put their stop just below it. Prices go lower, triggering their sell stops. Okay, now their sell stops are being triggered, right? Because we know most retail traders lose. Who's the buyer filling their sell stops? Who's the buyer filling the sell stop? Who's on the other side of that trade? Right, banks, institutions, or you. Okay, why can't it be you? I love to take that trade. Okay, well, why does it always have to be someone else? Why can't it be you? Okay, that's what we want to do. We absolutely want to buy the sell stops and sell the buy stops, just like a bank does. Make sense? So you're going to find so many times you have a nice fresh demand zone sitting right below the origin of that gap, and it allows you to really start trading, thinking and executing like a bank or a financial institution. And I would say the easiest place to do that is the FX market, the spot FX market. Okay, so I think that's there you have the larger time frame. Let's go back to the weekly, and you'll see all these levels on one screen. Ooh, there you go. Does that work for everybody? I love those areas right there. I think over the next, the chart is telling us over the next, a little bit of time here, prices should be contained inside those areas. Now, when we go to look at small time frame setups, you'll see there are some levels that are much, much closer on both sides of the market. Okay, let's do that. So there we go. So here we're looking at a small time frame chart of the euro now. We've got our longer time frame stuff set up. And on the supply side, actually I kind of lied to you. There really isn't too much here. Not until we go quite a bit higher, right? Now, is that a surprise? Or might we expect that finding supply here is a little tough? What was the first thing that kind of triggered that? That we might not be able to find strong supply close to current price. What kind of give us that clue earlier? Dollar supply, right? Notice how we scroll up. We looked at the larger time frames, smaller time frames. None of this represents the picture of fresh supply. So, yeah, George, you can certainly do some, an options play on that if that's what you're getting at. Okay, we don't have a ton of supply above current price, but we also don't have a ton of demand either. So, but what we would do is look to let something develop, And here you go. Here's what we'll set up. So you see all this kind of clusters of activity here? What we want to do is let price, one scenario is, price will turn a little bit higher here and fill all these sellers that are sitting here. And the goal is the price doesn't decline too much right here. The price just kind of stays sideways to higher here, and we need price to go a little bit higher. Because then what we'll be left with is a couple of nice little demand zones here. All right, especially like right in there. And then there's one sitting just below. Okay, and then you've got this little area below here. But again, for this to be, we need price to go higher first. You could get a little bounce here, but I'm not looking for a little bounce. I'm looking for, we need price to go higher to open up a profit zone. Okay, which didn't happen. So remember, this only becomes a demand zone once you take out this supply, and that's why we're disciplined and wait. See what's happening here? That's why you just don't buy it. You need this supply to be gone first. Ultimately, in the big picture, yes, we expect prices to go lower, right? We're bearish. We're bearish the euro, just like we're bearish gold. But that's in the big picture. Bearish S&P, bearish gold, and euro, big picture. Okay. Yeah, no, I wouldn't worry much about that area down there. I see your note up there. So yeah, smaller time, bigger time frame. I think we're perfectly set here. You play these two areas. Unfortunately, we're not close to either one of them. On the smaller time frame, we don't have anything at the moment. So let's not spend too much time here. That's okay. That's the beauty of trading, right? Just move on to the next market. Here's the Aussie. Okay. All right, let's take a look. All right. Let's start larger time frame. We'll move a little bit quicker with the Aussie. Same thing here. You just came up to the supply. Now we've fallen down. There's room below. You see how there's, again, on the weekly, there's two big picture levels, fresh levels above. And when we look in this below, you don't have that same type of fresh demand below. Does that make sense? So big picture, we're seeing, we're seeing big picture, the prices can come down. So, but in smaller time frame, it's a little bit different story. Let's go much smaller. Here we go. Sorry, I think the chat box is getting in the way a little bit. What I wanted to point out was you just had, you see how price just rallied just a little bit ago, 20 minutes ago, right into this nice supply zone. Now price is falling. Do we see any demand below current price on this chart? No. So let's go down to a smaller time frame. Again, you had a nice level there. We still don't see any fresh demand that's close. There is demand down there, but it's not close. and see if we have enough for a decent profit zone, because here's a nice little level. And again, just remember, this is a holiday in the U.S., so very light trading volume today in a lot of the major markets. Okay, so we do have a little supply at 78.25 to call it 78.27. Stop would need to be a little bit above that. If you look down and to the left, these are just pivot lows. Remember, those are not demand. Okay, but possibly a target right here, 78.14. Let's put that in. And I'm doing it. Why the reason for the target there? Because we always want to get out before the opposing zone, not at the opposing area, before the opposing area. So just like the other trade, though, we want to see this demand taken out that we're dealing with right now, and it looks like it is. Almost. We're almost there. Okay. Okay, so there we go. That's a very conservative setup. You can certainly go for a bigger move according to the large time frames. But again, pay attention to the dollar when you're trading. Most of these markets we're looking at. Yeah, pivot lows. Yeah, Joe. So definitely, if you get a chance, watch some of the other videos. There's a clear explanation why. Those are conventional, technical analysis support resistance levels, which is very different than the supply-demand concept we're talking about. But every time price comes down, for example, to demand, what's happening to the buy orders there? They're decreasing, right? Right, which means demand is getting weaker and weaker in that area. Right, so, and that's what pivot lows are. They're moves into those areas. Okay. Let's move on to the yen. The yen long term is going to be, I don't know that we're going to have that much to say about it just because it's been in this, multi-month range up here. But let's take a look. What would be nice is if we got out of this range, and we're pretty close to doing that. So let's spend a little more time here. I remember what we're talking about now reminded me of a conversation we were having around a chart that looked similar to this years ago. I don't know if any of you were with me in the XLT years ago when I'll show you. Back in 08, were any of you with me back then? Same kind of conversation we're having here, and we really spent time on it. We said, there's tons of room for this market to fall. We certainly didn't think this entire move was going to happen, but we planned on about 3/4 of it. So those are, those come along like twice in a lifetime, right? But let's go back to the yen. What we want to do is see, let's see what's above. If we get above that range, what's sitting over here to the left. Just a second and the chart will catch up. Okay, let's go left. All right, so you can see what's containing price up there. Really nice looking supply, right? Almost a very textbook level right there. We put our lines in according to rules. Here's our distal line. Here's our proximal line. That's right, Delphin. So here's a nice chance to re-enter that then, right? I love the yen. I don't know if you know, but the yen is the market I started trading with in the early days. I traded the yen for probably a couple of years before I even thought of trading anything else, just because I was in front of the yen pit at the CME. So let's go left or right. Ah, you're right, because of this. So in one chance to re-enter, what would be nice is, so we've hit this level a couple times in the past few months, Kurt, right? Um, the fact that we're just touching, and remember, we drew the zone based on the zone. We didn't put a line on those, we didn't like that's how the line should be, right? So the fact that we just touched this level twice in the big picture and felt pretty good. What does that tell us about the supply in this area? Yeah, a lot of supply or just a little supply? Yeah, probably quite a bit. Okay. So set that aside for a second. What's going to happen with the mindset of individuals and even some professionals if and when the yen trades above either of these two prior highs? In other words, when the news flash comes out around the world on everybody's computer screen and on television that the yen is just made a new high for the year against the dollar, are people immediately going to think bullish or bearish when they hear that? Because that will be the headline. Yen, new high for the year against the dollar. Right? Most people are going to be bullish. Right? Makes sense? So just look at the chart that I have up here. You've just had this rally from 95 all the way up to 121. And now if price trades above 122, is that the time to buy? Make sense? That's like saying don't buy your car when it's new, right? Pay full price for a car when it gets when you've driven it more than 100,000 miles. Because as soon as you go over 100,000 miles on your odometer, now you know that it's a great car. Because if you're able to drive it 100,000 miles, it's an amazing car. Now pay full price. Don't pay full price when it's don't buy when it's new. Wait till you've traded it. Wait till you've driven 100,000 miles till the car is proven. Does that make sense? Before you go run that next marathon, right? The biggest marathon of your life, make sure you run a marathon earlier that morning, a full marathon, and then run the important marathon. Okay? It sounds ridiculous. I agree. I see what you're typing there. It sounds ridiculous. But then why do people do it here in the financial world? Because they don't know. People do what people are told. I hate to say it. I'm a person too. But it's you look around life, it's monkey see, monkey do. I mean, people just okay. Okay. Anyway, and I think my price was up. So we're talking 122. So let's do this. Let's leave this one alone because I'm not comfortable. Well, let me just say one more thing. So look at the weekly chart as I have it here. If you read the trading books, where should you be selling short? Now think of one of the most popular chart patterns out there, the double top and double bottom, right? So where should you really, now let's say this high is 120, let's just say this high is 122. Where should you be selling short? What price, according to the books? According to conventional technical analysis, right? Technical analysis, like the Bible of technical analysis. Where do you sell shorts? What price? 122, exactly, George. Just that's the rule that's in all the books and all over the internet. So you sell short at 122. Where's your buy stop? Where should you be buying? Yeah, a little higher. Exactly. Maybe 122.10 or 122.20. I don't know, somewhere above 122. Does everybody understand that? Those are the rules. Just Google, double tops, and you'll see the rules. So Anyway, I think you get the point. So what we want to do, if we're really thinking and executing like a bank, is start selling where the buy stops are. Okay, start selling, and trust me, if price trades above 122, you probably will see this, ferocious buying coming into the market. There's probably people that have, buy stops sitting there to enter positions above 122. Let it happen. Let all the euphoria happen. But as soon as it dies down, we may want to consider a short position. Okay, because according to the charts, that's where the smart money is selling. Yeah, so Andre, you bring up a good point. Let me scroll left. And I want to see, okay, so the top of that level, call it 122.80. So that's pretty tight. A big picture level like this, only 80 ticks or pips. Let's see. So I'd want to, if it's a big picture trade, I want to have my stop a decent amount above 123. Okay. Now you might be thinking you have no interest in a 100 pip stop, but if you're betting on a 500-600 point move profit on the profit side, it's not such a big deal. Anyway, we'll plan that out. We're not there yet. Let's see what happens this week. Okay. And honestly, I think the trigger for you to get interested would be that headline. So you really don't even have to watch the chart. Just watch the headlines. And if you see something that says, hey, it's making a new high on the year against the dollar, time to pile in, that's when we probably want to get interested. Okay, let's look at another one. How about the pound dollar? All right, let's take a look. I'm going to skip down to a little bit smaller time frames because even on the daily, you don't really have any, demand until way down there. But that's not even worth talking about at this point. Why don't we start small time frame? We're going to have kind of a hard time here. Let's see. Again, not every market you look at is you're gonna have opportunity sitting right in front of you. Let's go over here. We need to see what's below. Here we go. Okay, so what I'm interested in is this price action below, and I'm gonna take one more. I think we're just taking different X-ray snapshots just to see where we're at and what's below. And again, I just looked at 3 or 4 different time frames. The level that keeps popping up is this one. On every one of these time frames, there's really nothing significant that's closer to current price. Where's supply though? Do we have any supply? So here's the level for the pound. Now, if you can afford it, you'd want to get your stop above the rally-based drop up there, but that's kind of a big one. I prefer the shorter time frame positions, Francisco. I prefer in the futures by far. But if it's bigger picture stuff, like half the things we're looking at today, spot market's totally fine. Okay. So pound has some nice small time frame levels above and below, and these aren't that small time frame, but so I would be very careful trading the pound in here unless a new level develops, which it certainly can. Remember, we may end it. We're going to end this session soon, but 10 minutes from now, a new level may develop. An hour from now, a new level may develop. Tomorrow morning, a new level may develop. But what we have to work with right now, the chart is telling us that banks are sellers up here at supply and buyers down here at demand. And doing it this way too, it's going to, you know, this is a good way to keep yourself out of trouble. And yeah, so Francisco, to make that decision, what you probably want to do is you know, anytime price comes close to a potential entry point in one of the major markets against the dollar, make sure you look at the dollar before putting on a position. Okay? Yeah, no, this one's okay. What you don't want to see is, remember those examples we looked at last time. You don't want to see prices trading above and below this level with ease, okay, prior to that. That's not the picture of an imbalance. It's actually the opposite picture. Okay. All right, there's my email address, sseiden@tradingacademy.com. I think we have some good levels to take a look at. You've got the S&P, the dollar, the euro, that yen, if it gets above 122. We've got we have a nice level above and below in the pound. Really nice levels today, plenty of opportunity. Let's just be sure and you know, patience and discipline are what we need to take it from here after doing the analysis, right? So there's my email address. If you have any questions, if you're struggling to achieve your trading and financial goals, just shoot me an email. We'll see if we can work through it. Other than that, have a great Monday and rest of the week. And I think I'll see you again later this week. I think. I could be wrong, but I think we have another session a little bit later this week. All right. Have a great day, everybody. Thanks.